Hi there, and welcome to my channel Simply Stocks. And today I'm going to talk about New Year picks. So, a very happy New Year to all of you. And this is the New Year Bonanza picks. All mid cap stocks, top brands, which look good now after the correction it has been over the last 6 months or so. So, let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position of any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about these picks, here's a small request that kindly support me on Patreon. Once you do that, help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts I put up from time to time on short-term, long-term market calls. And also, if you cannot pay on Patreon, you can get the WhatsApp membership as well. If you can email me, I'll send you the details for that as well. The criteria for picking up these stocks, these are established brands and strong managements, diversified yet market leaders in their own space, low debt, virtually no pledging, a strong institutional holding in these stocks, and there's solid return ratios and numbers that back these companies. So these are very established brands that have corrected from the top and that I believe are ready for an up move next year and can be accumulated and bought from a 2 to 3 year time frame. These are not short term calls, these are long term investment calls that could generate better returns than merely 14-15% yearly. How to allocate your funds into these stocks? Put 5 to 10% into each stock, not more than that. So you can mix and match with your Asian Paints of the world or Reliance of the world, the large caps, etc. And probably buy 3, 4 or a couple of these stocks, whatever you like. You can analyze and probably take a call on them. Buy over the next 1 year on major fall and hold for the subsequent 5 years. So basically these stocks are for holding in the next 5 years, but I'll give you a time horizon and an estimate on targets from a next 18 to 24 months period. But if you can hold next 5 years, these can be big over this period, over this time frame. But if you want to buy from a 12 to 18 month period, then you can probably accumulate over the next 1 month, 1 to 2 months, and hold over the next 12 to 18 months for very decent returns. The first in this list is Jubilant FoodWorks. Not many people are talking about it, and probably because of its higher valuations. But you need to understand that when it was trading at its peak, it was trading at 120, 130 PE, and currently it is trading at a PE of around 72, 75, which is a historical low PE that it trades at. So very interesting valuations at the moment. Yes, numbers have not been out of the world, but numbers have been decent and strong with margins more than 20% and growth of over 20%. So I think we could see the trajectory going up. Yes, there is a scare of the pandemic, and that is where one needs to probably take the benefit and take this opportunity and accumulate the stock in this region of 480 to 530, 540, and you can see a decent upside going forward. The market cap of the company is now 38,000 crores and has gone down 30% over the last 12 months. So the last 12 months returns have been negative 30%. I think this could do exceedingly well over the next 2 years. If things really get going, I won't be surprised if you get 60-70% return over the next 2 years or so. The second in this list is Nika. Again, a company that has got bruised and battered in this storm of being new age companies being sold here in India, like Zomato, Paytm, and even Nika got sold big time. But seeing the numbers in the September quarter, I see no reason why this should be sold off in the manner it has been done. Yes, I believe whatever that is happening in Nasdaq has does have a percolating effect into these new age companies and tech stocks. But I think now around 140, 150, it becomes extremely attractive. It's trading at 9.5 times FY23 earnings, and if I take into account FY24 earnings, which should be around 7,500 crores. I think we are looking at a situation where the stock is trading at merely 6.5 times sales, which is very, very attractive. If the numbers continue to improve, which it has done in the September quarter, and remember, October to December quarter is the big one for this company. So I think a very good upside is possible over the next 5 years. Yes, over 18 months, I see 60-70% upside, but over 5 years, this could end up being a big multi bagger because if Nika does things correctly, it could end up churning out profits probably from FY28 or so, FY27, FY28. So probably next 2 years they'll build base again, and then things will start going up. So margins have improved, things have improved dramatically on the margins front, from around 3.5% to 4.5 5%. I think on the ground things look good. Yes, the valuations were stressed, so it got sold off big time. It's down 70% from the top. So again, margin of safety is there with the stock. So I believe one can accumulate in this region of 135 to 150 on dips, and I don't see it going below 110, and once things start moving, you can get 70-80% upside over the next 18 months or so. The third in this list is Tata ELXSI, another of your mid-cap stocks that did exceedingly well this year, but now has corrected over the last 2 months from the highs of around 10,000 or so. It's corrected to 6,000. It's a good 40% correction that we have seen, and probably because of the fact that in the last 2 quarters the growth has slowed down, but now the whatever the prices are and wherever it is trading at, it looks like things have been priced in at around 6,000 levels. So if one can get an opportunity, one can definitely accumulate around 6,000, and this in my opinion is a good 4 to 5 year play. It can do exceedingly well over the next 6-8 months as well because of the kind of fall it has had. So I won't be surprised if it goes back to 9,000 over the next 8-9 months. But then it will may correct 10-15%. But over the next 5 years, I would be surprised if you don't see the stock beyond 13-14,000 or even more than that. So, in my opinion, around 6,000, again, the margin of safety factor with Tata Elxsi is big. So, I believe one can accumulate around here and buy more around 5,900, 6,000. Can't see it go below 5,200, 5,300. And once things really get moving over the next 2 years, I see 9 to 10,000 again on the stock. And over the next 5 years, I won't be surprised if we see it even closer to 15,000 or so. The fourth in this list is Blue Star, focused on providing white goods such as water purifiers, AC, air purifiers, etc. And with the pandemic coming again and people becoming more health conscious, their air purifiers are selling big time as well. They also manufacture air coolers, water coolers, commercial refrigerators, and many more products. Now, the best part about this company is that for long the margins have remained low for 4 or 5 years, but now things are expanding on the margins front. Things are expanding on the profit growth front, even on in quarters which have not been their best of the quarters. So in winters, etc., numbers have been pretty decent. I think stock has done well, yes, and it is trading at around, but it is trading at 48-50 times, which is not very expensive. Normally, these stocks trade at 70, 65, 70 times. So, any dips towards 1150, 1130 is a buying opportunity, and it can easily double in the next 3 years with the kind of numbers it is producing. And the fact that the summer season should again be big. 2020 and 2021 hasn't been that good, so next 2-3 years could be much better as inflation eases out and raw material costs eases out. I think things should look much better going forward for these white goods companies. I think numbers should improve even dramatically, even more from here at this point of time. So let's see, after Blue Star and these four picks, which is the final pick that I have picked out for you in this midcap arena after the midcap fall that we have seen and which could do extremely well over the next 3 to 5 years. So the final pick of mine is Coromendel International. Now, this is a stock that had done well till the initial part of this year, but over the next 2-3 months has declined and has come down around 25-30% from the top. It provides crop protection products along with fertilizers and phosphates, and it has a very good management and mainly produces pesticides and specialty nutrients. And I think agri economy will pick up as things get better on the rural front, and rural income picks up. And monsoon has remained pretty robust over the next last 2-3 years, so hoping for the same going forward. So once rural income pick up in say FY24, we will see numbers improve even further, and Coromandel has been producing very decent numbers on the top line and bottom line, but the valuations have become attractive after the fall of the last 2-3 months that we have seen. Currently trading at very interesting levels and very good long term supports. One can definitely accumulate and can give you very decent and peaceful returns here. The stock is not very volatile, and it once it starts performing, it goes up for several trading sessions, and should perform going forward. So this was a video on my 5 picks for this new year from a 3 to 5 year time frame, as well as from an 18 months time frame. Please do like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching, and a very happy new year to you again.